Hey traders, welcome to Charts and Coffee. Hope everyone's having a great Wednesday morning. We're going to take a look at what's going on in the broader averages here this morning, pre-market, bonds, gold, crude, and also the economic calendar. So if you checked out the free video that we did at the Simpler Trading website just yesterday, you'll see I talked a lot about the trends that are still intact and that next wave, right? So when I think about waves, right, we know we have ebb, we have flow, things, retract and they expand. And it's okay for things to retract. It's okay for things to retrace because that's what's going to set up that next push. So I continue to outline my bullish thesis based on the data that we see, based on tendencies for the year, based on the election cycle, dovish pivot, the current trends that we have in these markets. So the question is, when we get these kinds of pullbacks, retracements, reversions, whatever you want to call it, you can call it a peanut butter and jelly sandwich. It matters less to me that what the name of it is, and rather within the context of the trend, does the weakness in the NASDAQ, does the weakness in the S&P, do these change what we're thinking about, what we're seeing, right? Forget what we're thinking about. Does this change what we're seeing in the trend? And so far, that is a big no. That means that when the pullbacks happen, if we can wait for whether that be a mean reversion, I use a 34 bar mean reversion, whether we're waiting on a volume level, whether we're waiting on a volatility level, whether we're waiting on timing. For example, today we have Powell. Let's jump on over here. Today we have Powell at 10 after 12, I believe. Yeah, so we have Powell coming up 10 after 12. We have ISM Services PMI at 10 a.m. this morning. We've already had the ADP non-farm, which is really not as big a deal in terms of the movement that I'm going to be looking for the remainder of the week. But it's a contributing factor in terms of being a little bit of the information that we want ongoing to confirm that inflation is within the realm of where the Fed can act in June or July, things of that nature. So we'll continue to monitor as we go. But we get to hear from, the Grand Poobah himself at 10 minutes after 12. So these are things that would be related to timing. Regardless of what you're looking at, remember that there's three big things that are changing in this environment, and they've continued to be the sea change that's happening in trading, affecting all of us, right? And I mean affecting retail traders, affecting institutional traders. It's not as if one group gets a pass on the behavioral changes in the market, and they've been happening since 2020. The interesting thing was let's face it, we were all just so happy in 2020, taking advantage of one of the most epic uptrend in the history of humans with keyboards that we've ever had, that what was happening was easy to miss until 2021, 2022, 2023 started making these changes really obvious. And then we adapt. What are those changes? The broadest, most active retail participation ever due to advancements in technology, the gamification of platforms, access, right? Then we have what's happening at the institutional level. Why are they doing what they're doing? Which ones are using algorithms? To what degree are algorithms turning on and off? There are really 5 major sort of algorithmic reasons, processes that these math equations hooked to powerful computers with high-speed access. There's basically 5 things they're looking for. So now we've got even more reason for participation to come in and out of the market. So if we take a look at these things, and then 0 days to options expiration, those are continuing to grow in popularity exponentially. These are changing the way traders are moving in and out of the market. And so that's what we're continuing to deal with. So when I see this uptrend, I've got to measure this trend. I've got to measure the structure in a way that's different than I have before. So when I take a look at this right now, I can still see the green. And where are my drawing tools here? Bear with me one moment. Let's get some drawing tools on this chart. So when I take a look at this chart, what I'm seeing is this is the S&P. By the way, this is the strongest in terms of energy of all the indices in terms of consistency of bullish energy, this is it. Bullish momentum, bullish trend, bullish candles, support at the daily price movement range, support above the mean reversion, the 34 bar mean reversion. There's nothing about this that is, when I map this out to weeks or months, that is at the moment bearish. We've had 3 days, 2 days. I don't even know if today is going to be that way. We've had 2 days of lower lows and higher and lower highs. 2 days. And this is the end of the uptrend, right? So these are things I want everyone to think about. And by the way, it's really easy to get caught up in the narrative of people saying, well, see, this is the end. It might be. But if I don't have a consistent way to say why this might be, if I don't have a very simple to read process to say why, it's easy to get caught up in a pullback like the 30th to the 31st, or a pullback like the 16th to the 7th to the 20th of February, or the pullback that went March 13 to March 15. Do you see something familiar with every one of those pullbacks? There were pullbacks that led to higher highs. Now, at some point, that's going to stop, but there's nothing indicating right now that that's going to stop. And right now, for the first quarter, we've been ridiculously bullish. I've shared with you all, what we've been doing in the mastery and the way we've been trading and why. And here's what's interesting. And I don't know that I've ever mentioned this, and I still need to upload end of March and beginning of April statements into this. So this is what feeds the information here. For those of you using any kind of trade tracking software, you grab your statements, which can get exported in a convenient little Excel file. You upload it to your software of choice. I just happen to use TradesViz, and then it'll start giving you really interesting information about what's happening in your account. Not just my net liquidating value is up, not that just my account is up. That's not enough. Where are those little sneaky things that are happening trade by trade by trade that you may not know until they become a catastrophic problem? Anyway, the growth has come. I was double checking this. Every single trade that I have put on this year has been a long call. That's it. Long call, cash account. No spreads, no puts, no complication. Long call, cash account, right? So that's what this is. And when folks say, well, you can't make money doing long calls, long puts, I beg to differ. Me and about 1,000 members of the mastery are doing exactly that day in and day out. So think about, how do I simplify the process so I'm not getting bogged down in the complexities of Greeks and strategies, and I can just pay attention to the message of the market. That's what this is. This is the decoder ring. We're just looking at decoding the market in a way that continues to morph since 2020. And these changes are really evolution, right? We're not going to devolve to the way prices and action was behaving in the early 2000s or the 90s or the 80s. We're not going back to those times. Oh, that would be great. But for the halcyon days of simplicity and trading in the 90s and early 2000s, that's not the world we live in today. So we move forward to, how do we decode today's markets and those factors that are not going anywhere? If anything, they're going to become more impactful. And when I look at the S&P, this has got to be my favorite of the indices. And when we look a little bit further under the hood, it's financials that are powering a lot of this. It's energy that's powering a lot of this, right? What else is heavily weighted in the S&P that maybe we could also look at? The Dow. Well, the Dow benefits from XLE. The Dow benefits from XLF. The Dow also benefits from XLI, industrials. So if we move away by looking at structure, if the structure based on grab candles, actually gray candles, these are the green, red, and yellow candles. These are the top tier candles. And I look at the top tier structure, there's no reason for me to be too preoccupied with the NASDAQ and tech when there are other sectors now that are at the top of the food chain that are taking the broader averages up. Find those relative outperformers. Feel comfortable saying no to things that might have paid really well. Magnificent Seven, tech, NAS. Say, you know what? That was great then. This is what's working now. And when you have a process to do that consistently, you'll be able to adapt with where the strength is. So I hope that means that everyone here is thinking to themselves one of two things. Okay, I'm going to go back to my tools and figure out how I'm determining what the structure of any time frame is. Or two, I don't have a way to do that, Rog. This is something that I have great strategies. I can deploy my trades really comfortably. I'm comfortable with my platform, but I don't have a strategy for that. I don't have a toolkit for that. So toptierprosystem.com is a webinar where I'm going to share with you my toolkit. This is a toolkit that's been tested for 13 months. The brainchild of it started in 2020, noticing what's happening in the modern landscape. And we've had many of these shifts, and we're going to continue to have things that are going to impact how we trade. But the three biggest ones right now are retail trader participation, 0 days to options expiration, and what is happening at that volume level with algorithmic trading. These aren't going anywhere. In fact, these are continuing to dominate the market. By the way, I love the retail part of it. I love that retail traders are getting empowered to do this. That's who I'm talking to. That's who I am. I root for traders that are trading their own money, making their own decisions. So if that's who you are, you're definitely going to want to check out what we're doing tonight at toptierprosystems.com. All right, so let's see what we have in terms of questions. Let's get to it. I think I see a few of them coming through. Yeah, we do have some interesting, Anthony, when we step into the mastery later on today, I agree. Anthony's talking about American Express, Disney, Netflix. So why are we talking about these three symbols? That doesn't seem to be what everyone else is talking about, right? When you turn on the television, you go into different discussions, meme stocks and favorite stocks, right, tend to be the focus. American Express, along with three other names, JP Morgan, Wells, Bank of America. No, actually, JP Morgan, Bank of America, Citi are primarily what I'm focusing on in that financial section. American Express would be another one. These are your relative outperformers in financials. Diz is one that oftentimes gets overshadowed by Netflix, funny enough, because Netflix and Disney share space in the communication sector. So communications is usually largely considered, Meta's playground, and that's fine, but the better structure, the better follow through is in Netflix. This is where, again, we're taking a look at the overall uptrend, the green candles, mean reversions, the daily price movement range. These are all indicating that if there is follow through after we sink down to support, is there the tendency to pull back, continue, right? Netflix and Diz would probably be two of the top two contenders in that group. Not that Meta can't, but do you see how Meta structure is markedly different? Meta was in a fantastic uptrend, and continuation is largely the probability. But Meta's losing some of that bullish momentum, actually has lost the bullish momentum, bullish trend. Now, much like if you're driving down the highway, pedal to the floor and just let off the gas. Does the car stop? Let's forget let's forget electric cars. Good old combustion engines. If you're flooring it and you just let off the gas, are you still moving forward? Yes, you might be decelerating, but you're still moving in that direction. Think of that as when we have a trend, pedal to the metal, and then the foot comes off the pedal, but we're still coasting at a high speed in that direction. So that's what I mean by continuity. That's what I mean the probability is for continuation. And so Meta will benefit from that, but Diz and Netflix, they still have the energy. They still have the pedal to the floor. There's still that trend. As you can see, they're visible in both of those. So yeah, we really like those. Anthony, good stuff. All right, next up is, and if I haven't reminded everybody already, in terms of what we're going to be talking about tonight, what are we doing with this current environment, and how are we measuring what's happening? How are the results, right? I mean, let's face it, Rog, you've got some things you've been working on for 13 months. Awesome. But how is it working? We're going to talk about that as well. So when we come into that webinar tonight, please bring paper and pencil, whatever it is you want to take notes with, because we're going to be talking about not just what I have done, but what I plan to continue to do from this point forward. What is working? The markets are up. This has been so far an amazing year for account growth. So let's ultimately take advantage of what we see, not what we fear, right? I used to say, trade what you see, not what you think. I'm actually starting to think that the real problem is not that. It's trade what you see, not what you fear. If your trading is being guided by fear right now, that's an awful feeling, right? That should not be where you are. Fearing the next pullback, fearing a crash, fearing whatever the media wants to tell you to fear, right? And by the way, why do they do that? So you won't manage your own money and give it to the people that advertise on the channel, right? Of course they want you scared. Of course you're going to talk about the dark at the top of the stairs, right? But that's not been the case. So and I'm kind of morphing too. Trade what you see, not what you fear, right? And how do you do that? You color code, you simplify, you create a system where you can glance at a chart and say, of course I want to buy this on a dip. It's green. Green means go, right? Okay. So how do I sign up for today's webinar? Yeah, no problem. Head on over to toptierprosystem.com. Toptierprosystem.com. All right. Next up is, what is my average hold time? Java, I don't have an average hold time, but I will say that I can't say that. Actually, I could say if I pick apart my trades viz, it'll tell me what my typical average hold time is. But what I will say is if I have a swing trade off a 1 hour chart, my time horizon. So it's not my average hold time, but it's related to the question, which is how long am I thinking, planning, seeing, whatever the word is for you, how long is that window open for most of the time? So that is on the 1 hour time frame, 1 to 3 days. That's a short-term swing. When I move back to the daily time frame, which I love, it's usually 2 to 10 and greater, 2 to 10 days and greater. So I try not to think about average hold time as much as I think about time horizon. Yeah? All right. Awesome. Next up is, can we take a look at GE? Yeah, so here's the thing. GE is having a price discovery moment. What do I mean by that? GE is now splitting off healthcare and aviation. You don't even need to be up on the news. You just know that GE is taking this big entity that was GE and now it's 3 slices of pie. Okay, who doesn't like pie? Well, we got to find out what this particular slice is worth, right? So what's happening right now is simply price discovery. Do not step into the mosh pit of price discovery. Let everyone else battle it out. Let them come out battered and bruised and bloody. We'll wait until the dust settles because price discovery can be brutal. Meaning, as we determine, sans those 2 operations of the overall GE, what do we think what's left is worth? Interestingly enough, Eva, we just did this in the Sector Secrets Mastery yesterday because we had one of our members very astutely ask, what are the opportunities longer term, even longer than a daily time frame, going out to a weekly time frame? And so we put the top tier system to work on the weekly and said, yeah, we need to start paying attention. But I don't believe at the moment, based on what's happening on the chart, based on what the indicators are telling me about price and volume and participation, that it's time yet. Soon, but not yet. All right. Soon, but not yet. All right. Next up is, let's see. Anthony says, you're learning how to use that PSC. You know, Anthony, I'm super glad to hear that. So a big part of any trading, what are the obstacles in the way? What are those things that tend to prevent traders from trading as well as they possibly could be? I have found it's not always understanding an indicator system or understanding the market or being able to interpret price. A lot of times it's the tech, right? So that's why every week we have a tech session. Every Monday we have a tech session in the mastery. And there will absolutely be a tech session with the upcoming class where we will have 2 different tech sessions. One is Lorna Bot's going to help you set up your charts. So they basically look like what I use here with you all. And then I'm going to have a separate tech session to show you how I use today's technology to really make technology my trading platform, my trading partner. You don't have to trade alone. I mean, you certainly don't if you're in the Sector Secrets community, but how do I have someone else here in the office, which, by the way, it's empty. It's just me and a million books, right? How do I have someone else here in the office that's got my back, that's watching the markets when I can't? And that's where technology, as much as it's a reason to adapt to the reality that we have today and going forward, technology can be also an asset. It could be a tool. So we're going to be building that into that upcoming class as well. And for those of you that are wondering, the class is on the 13th of April. So it's going to be next Saturday, next Saturday. But if you want to know what I'm going to be doing in that class, learn a little bit more about the tools that are moving the needle, and we'll continue to do so. Check out toptierprosystem.com. Register. I'll see you tonight at 8. All right, gang. Thanks as always for being here for Charts and Coffee. I'll see you tonight. It's a date, right? I'll talk with you soon. Be good to each other.